Welcome back, traders. Welcome back to another Liquid FX YouTube video. Here we're going to be discussing, or today we're going to be discussing one of the most prominent concepts in ICT, and it is the Judas Swing. Now, the Judas Swing is essentially what the M stands for in the accumulation, manipulation, and distribution power of three schematic, right? So if we just remind ourselves of what that is, we know that the power of three is essentially everything. Well, it's essentially the bread and butter of ICT concepts, and the power of three represents the AMD. The AMD, as we know, is the accumulation, manipulation, and distribution. We specifically today are going to be focusing on what the M represents. Now, the M stands for manipulation, and the manipulation is what we refer to as the Judas Swing. Now, some people call it the turtle soup, some people call it simply just a manipulation, but in this video, or for argument's sake, we're going to be referring to it as the Judas Swing, right? So we need to understand quickly where we are. So the power of three is essentially the open, high, low, and close, using the concepts of accumulation, manipulation, and distribution, or AMD for short. We're going to be dissecting what the M represents, and that's the manipulation of the market, right? And the manipulation is characterized by a Judas Swing, and we're going to be going over here on GBP USD in the last month or so, December, January, going into February's price action, as to how you can identify the Judas Swing you're trading. So just a quick outlook here on GBP USD before we go down to the M15 and M5 timeframes is that we, of course, don't have the greatest market conditions. Well, for the way that we trade at Liquid FX, it's pretty rangy at the moment, right? So this here is a big, we've been trapped in a bit of a range. We could be seeing price head down now, seeking buy side liquidity or sell side liquidity at some point. We could be seeing price head down and fill this fair value gap over here and head up that way. But as it stands, we're in a bit of a range, but nevertheless, we can begin to dissect some of our concepts and see how we can identify an ICT Judas Swing. That is the aim of today's session. That's the aim of today's video. So if we now dissect price again on the 15-minute time frame, before we begin, it's important to understand how we're going to be incorporating some of the other concepts, which is essentially the PD array. So I've made separate videos which really dissect what the PD array is about, or the premium and discount array. But essentially what we have over here from the 4-hour time frame is that we have a swing high up here, and we have a swing low down here. So what this fib tool represents, or this Fibonacci tool represents, is simply delineating the premium from the discount, right? So we understand above the 0.5 level, we are in the premium. Anything above the 0.5 level is premium, and anything below is a discount. And we know from some of our previous videos, or just intuitively in price, we should be looking to sell in the premium and buy in the discount. So a quick schematic of that will be, if we have price action of such, we have our premium up here, and we have our premium up here, and we have our discount down here. What we're looking to do as traders is we want to be selling. We want to be waiting for price. We want to be selling up here, and we want to be buying down here. Right, so this is how we're going to be operating the markets, right? So we want to be selling in the premium, and we want to be buying in the discount. Now this is so we are selling and buying in the correct places, which gives us our A+ setup. So this is one of the most important bread and butter concepts within ICT as a whole, right? Understanding PD arrays, and this is what we're going to be looking at. So when you identify a bullish swing or a bearish Judas Swing or a bullish Judas Swing, understand it is in overall context of PD arrays, fair value gaps, and liquidity, right? Things which we've discussed on other videos. So if we go up here now, we begin to dissect most recent price action, right? Some days provided us with an OTE, or an optimum trade entry, or just simply an entry based off of rules, and some didn't. So if we now skip down a time frame, we can begin to dissect exactly how price behaved each and every day. Starting with Friday, the 2nd of February. So this was a day which I personally didn't trade, and the reason for that is that we had the famous NFP. So this massive move down here was NFP. So my strategy to trade NFP is pretty simply to avoid it. There's no secrets there. But nevertheless, we can begin to dissect price action in a systematic manner, right? So we understand we have a couple of ranges to work with. Now we have the Asian range over here in orange. Now the Asian range, like I've discussed in many videos, is simply a low volume time of day. Now, what makes the Asian range ideal for trading, right? So this is the Asian range. And what makes this ideal for trading? Now, ideally, we want the Asian range to vary between 20 to 30 pips, right? That's typically where our Asian range should be. Yes, it can be, give or take a few pips here and there, but typically we want our Asian range to be 20 to 30 pips in size, from the Asian high down to the Asian low. The second thing we're going to be looking for the Asian range, and this is non-negotiable, is that it is from the time of 8 p.m. to midnight Eastern Standard Time or New York time. So it's very important to calibrate this to wherever you are around the world. Again, we're looking on the 5-minute time frame over here. So if I add that in, 5-minute time frame. So this is the 5-minute time frame we happen to be looking at, and we're first dissecting the Asian range on your screen in orange. Okay. Now the second range we're going to be going over is something called the central bank dealers range. Now, what is the central bank dealers range? Well, it's a range similar to the Asian range, but the timings are different. So the central bank dealers range is going to be from 1 a.m. This is now UK time, so it's going to be midnight New York time to 7 p.m. New York 7 p.m. New York time, right? So 7 p.m. New York time to 1 a to sorry, this is UK time. So our central bank dealers range is going to be from 2 p.m. to 2 p.m. to 8 p.m. New York time, right? So this is again calibrated in UK time because Liquid FX is based in the UK time, but the box that we see over here is what we call the central bank dealers range. Okay, now the central bank dealers range is a range which we're going to be dissecting in some detail as well. So the key to understand is that when we see Judas swing in price, the Judas swing represents the high or the low of the trading day, right? So the Judas swing is very easy to identify on your charts, right? Because of course on Friday we had a massive sell-off over here, so the high of the day is very, very typically above the Asian range, right? So it's important to understand the Judas swing will be a manipulative piece of price action above the Asian range. Okay, so this is the Asian range over here, and our Judas swing is in yellow. This is typically the high of the day, and the high of the day corresponds to the Judas swing. Now the Judas swing will typically represent the high of the day, always above the Asian range. Now, why do we use something called the central bank dealers range? Okay, so this is the central bank dealers range, or CBDR for short. Now the central bank dealers range is a very powerful range when to help us project where roughly the Judas swing will be. Because if we just take this to the side for 1 second, once we have an Asian range over here, once we have our Asian range over here, and this Asian range is going to be again in orange, we're keeping the colors consistent. What happens is some people might say, well, is the high of the day going to be here? Is the high of the day going to be all the way sort of up here? Where is the high of the day going to be? Now, of course, predicting it exactly to the pip is unrealistic, and it's something that you shouldn't be doing as traders. But the central bank dealers range gives us an extra confluence as to how high the Judas swing will actually head up to before we see it reverse in price and head the other way. So here's how we do it. It's very simple. We use something called standard deviation, right? So one standard deviation is equivalent to the range in pips of the central bank dealers range. Okay, so simply what you can do is you can draw a box around the central bank dealers range, and what you want to do is you want to extend it up just like this. This is how we use central bank dealers range in terms of just simplicity, right? Getting the content out to you guys so you can understand it, right? So this is the central bank dealers range, and what this represents, one box above represents one standard deviation. One standard deviation, right? Now this is one standard deviation. So what this represents, or what I want all of you to understand, is that the Judas swing, or the high of the low of the day, will typically occur 1 or 2 standard deviations above the central bank dealers range. So the central bank dealers range, again, like I said, is from 19 o'clock to 1 a.m. UK time. So this is now calibrated to UK time because we're based here in the UK in London. So the central bank dealers range gives us an indication as to how high the Judas swing will be above the Asian range in a bullish market. Right, so this is an extra complement you can use in your trading. Okay, so going back to the schematic here on the right, what is the Judas swing and what does it represent? So the Judas swing is a manipulative piece of price action that will occur typically in the London session, or it can happen in the New York session as well. Right, so this is the Judas swing. Now, what is the purpose of the Judas swing and why are we interested in the Judas swing? Well, there's a few reasons. The first reason is it represents manipulation, right? So it's typically a run of stops, right? Sweeping out buy-side liquidity, right? So it's a manipulation, sweeps out buy-side liquidity, right? That's the first thing you want to understand. The second thing you want to understand from a trading perspective, all right? This is where it gets really important, is that the Judas swing, in this case, in a bearish market, right? Because we saw a sell-off, the Judas swing will represent the high of the day in a bearish market, right? So this gives us an indication of where we should be selling from to maximize our move in the market, right? So the Judas swing gives us the high of the day, and therefore allows us to sell close to the high of the day as possible. So what we want to be doing is we want to be looking for a fair value gap or a breaker or an OTE in this region over here, or just a fair value gap is fine. And our job is to sell as close as possible to the Judas swing, right? You can't aim for the exact top of the day, that's unrealistic, but you want to try and sell as close as you can to the top of the day, i.e. as close as you can towards that Judas swing, in order for you to maximize your risk to reward or maximize your RR, okay? And so this is essentially how the Judas swing works. It's a manipulative piece of price action, right? So it's essentially trapping traders onto the other side or the wrong side of the market before we see it tank. Now, this is a very aggressive example because it's NFP. We're going to be going over some other examples which will help back this up. So here we go on the previous day. So this is now the 1st of February 2024. What we see is we're now in the discount. So we're in the discount range. So that tells us immediately we should be looking for buys because we are below that 0.5 level as we discussed. So now we're looking at the same thing. We're looking at the same exact principles, but now flipped on its head because we're looking at a bullish scenario now. So if we zoom into price and have a deeper look, again, we start with our Asian range. So our Asian range here in orange. Our Asian range is going to be from 8 p.m. to midnight, New York time. Or if you're in London, should have said that at the start. If you're in London, it's going to be from 1 a.m. all the way to 5 a.m. UK time, okay? This is essentially the Asian range timing, so I get this question a lot, so I'm going to try and go over it in as many videos as possible, right? So again, this is our first point of call. This is our first place to start. Now, what's our next place? What's the next thing we look for? Is that our Judas swing on a bullish day will be below the Asian range, right? So we understand that we have a Judas swing over here below the Asian range, right? Below the Asian range. Now again, this is trapping traders onto the sell side of the market, sweeping out sell side liquidity before breaking structure up to the upside. So what we see over here is we see our bearish market printing us lows and higher lows, lows and lower lows. And what we see over here is a very clear shift in market structure, right? Now this shift in market structure occurs in this region over here. So when we see an arrow over here being drawn in price, that simply represents a shift in market structure, right? So when we see a shift in market structure, this essentially gives us our shift in structure and therefore our Judas swing. So our Judas swing occurs here in the London session. Judas swings occur typically in the London session, right? Typically they occur in the London session, right? So again, this is a Judas swing or the manipulation phase in the AMD, which gives us a sign or a signal that we could be looking for potential longs. Now, of course, from my other videos, we understand that we need to look for an order block, right? Now, our order block has 3 specific rules, which we won't go through in this video, but considering we have a Judas swing over here, our entry would be more or less in this region over here. Stop loss just below the Judas swing, and this is another key aspect of the Judas swing. It allows you to determine an accurate place to keep your stop loss, right? So where do you want to keep your stop loss? below the Judas swing low. This is where you want to keep your stop loss, right? Having your stop loss below the Judas swing low represents a safety net in price, because you understand once the low of the day has been created via the Judas swing, we understand that price is very unlikely to go there. Therefore, it's a safe place to keep your stop loss. So we need to understand concepts in conjunction. Yes, the Judas swing is a manipulation in price, but it also represents and prints the low of the day, and that's very important to understand. So this Judas swing is the low of the day in a bullish market. If we were in a bearish market like we saw previously, it's going to be the high of the day, okay? So as you can see, following the rules of a basic Judas swing, you can buy up towards at least the Asian high for a nice 1 to 2.7, 1 to 3 trade, okay? So that's essentially how the Judas swing works, very simply, right? Using accumulation, manipulation, which is the Judas swing, and we're looking to buy up the distribution in price up to the premium, right? So we're buying from discount to premium, okay? So if we just go through the chart and look at some other examples, here we have an example, but this is quite an erratic day. This is quite an erratic day because of FOMC, right? 31st of January 2024, this was the FOMC, right? But we need to again understand how price operates. So if we now bring back what we call the central bank dealers range, now the central bank dealers range is a range that occurs just before the Asian range, so that's going to be 19 o'clock to 1 a.m. UK time. So if we just begin to draw this out in price, then the central bank dealers range again represents, we don't need to go into the intricacies of what it represents, but the central bank dealers range allows us to project where the highs and lows of the next day are likely to be, right? So we understand that we're in premium over here. This is a premium in price. So if I just label this over here so we know, premium, look for sells. So if we have a premium, we want to be looking for sells, okay, as we're above that 50% level. So how does the central bank dealers range help us? How does this blue shaded box help us, right? So just to clarify again, the central bank dealers range, right? The central bank dealers range will be a range from 19 o'clock to 1 a.m. UK time, right? Or London time. Please calibrate this to wherever you are around the world. That's very important so you can understand and not get confused, okay? So now what we're gonna do is we're gonna understand that we have our standard deviations. And the way standard deviations work very simply, are very simple to understand, very simply put. One standard deviation represents the range, the original range, right? So this is the central bank dealers range. This is the central bank dealers range, represented here with CBDR, central bank dealers range. So what our job now is to do is to understand. This is something you want to write down. So with one standard deviation being achieved over here, we need to understand that price will likely print the high of the day 1 or 2 standard deviations above the central bank dealers range. The maximum price will go up to is 3, but it's very typically 1 to 2, or it can be slightly over 2 standard deviations, right? So this is what we use to project the high of the next trading day. So this is standard deviation 1, and then now I've just printed out standard deviation 2, right? So what we see over here is we see price giving us quite an accurate representation of this, where what we see is we see the high of the day being produced just above 2 standard deviations from the central bank dealers range. This is the high of the day. This is the Judas swing, okay? This is the Judas swing, the high of the day, right? So that's going to be labeled here in yellow. Now this is the Judas swing. So one question I often ask is, how do I determine the Judas swing? Well, this is how you do it. This is how you determine high probability Judas swings using the ICT model. The first thing is to understand, are we actually bullish or bearish? Should we be looking for the low of the day, i.e. in a bullish market, or should we be looking for the high of the day, i.e. in a bearish market? Now that's the most important thing. That comes down to a daily bias. So the first thing you want to understand is that you want to have a daily bias. Are we bullish or bearish? That's the first thing. The second thing we want to look for is that we want to understand, are we in premium or discount? Because premium or discount is incredibly important. If you're in discount, you want to be looking for buys. If you're in premium, you want to be looking for sells. It's that simple. So the concept of PD arrays are important. These are the two things you need when it comes to understanding whether or not we should be looking for a bullish or bearish Judas swing, right? There are other concepts such as fair value gaps and liquidity is as part of market maker buy and sell models. We won't discuss that in this video. This video is simply specializing in how to identify a high probability Judas swing. How will you know if your Judas swing is high probability? Right, so again, we see the high of the day being printed above the Asian range. So we have an Asian range over here, simply 2 standard deviations above the central bank dealing range, and that gives us our high of the day in this region over here. So what are the things that constitute to a Judas swing? Or what are the 3 things that constitute to a Judas swing? The first thing, it needs to be above or below the Asian range respectively. So in this case, we're looking for sells, we're in the premium. So we need to understand we need to be above this Asian range, which we very clearly are. So that's the first thing. The second thing to make a Judas swing valid is we want to see a break of structure. Now, how do we see that? Do we see that? Now, we see a low being printed, we see another low, a high, a low, and we see a high in this region. So our last structural low is simply over here in this region. This is our last structural low. So what we see here is we see a very clear break in the market structure. We see a very clear break in structure, giving us our shift of structure or giving us our break of structure, right? BOS for short, break of structure. So with these 3 rules about correct pricing, above the Asian range, and giving us a clear shift of market structure, this Judas swing becomes valid. So this is a valid Judas swing. And a valid Judas swing will be the high of the day. Okay, so if we just sum up what we've covered in this video, right? The Judas swing is a manipulative piece of price action, right? So the Judas swing is the manipulation. The Judas swing is a manipulation, right? So we have obviously 2 ways of looking at it. We have the bullish example and we have the bearish example. If we start with the bullish example, what we're looking for is we're looking for a relatively tight 20 to 30 pip Asian range, and we're looking for price to head down in the London session, giving us a break of structure below the Asian range, and that we can buy near the Judas swing. Okay, so now that we've seen this, we need to understand that yes, we have an Asian range first. The Asian range is always going to be there, right? It's a period of time which of course we need to calibrate to wherever we are around the world. I'll repeat the timings for those who want it. So it's going to be 8 p.m. to midnight Eastern Standard Time. So please calibrate that to wherever you are around the world. Pause the video and take a note of that, because that's very important, because I get a lot of questions on that. The next thing we want to look for is we want to look for price to head lower, sweeping that Asian range low, right? We want to see price head lower, sweeping that Asian range low. The next thing we want to look for, the final thing we want to look for, is a break of structure. Now that break of structure represents a shift in market structure, and it shows a willingness for price to move in the intended direction, in this case bullish. And our job is to buy near the Judas swing, having our stop loss just below the Judas swing, and we want to target either the Asian high or typically previous day highs, or even previous week highs as well. So that's one side of the coin, right? That's looking at a bullish scenario. Now it's the same thing for a bearish scenario. We're just going to flip it on its head. It's really that simple. So when we look for a bearish Judas swing, what we're looking for is we're looking for an Asian range, 20 to 30 pips. We're looking for price to sweep the Asian high and then give us a clear shift of market structure. And we of course enter off a fair value gap that presents itself in the London or New York session, or the crossover between the two, doesn't really matter. We have an Asian range here in orange. We have a Judas swing over here in yellow. And our job is to enter off a fair value gap near the Judas swing. Simply put, that is the Judas swing, right? So the key takeaway to understand when it comes to the Judas swing is that the Judas swing will create the high or the low of the day. So if I use the bullish example, to illustrate that, the Judas swing will be the low of the day in a bullish market. So if we have a bullish market, or or should I say more specifically, that day is bullish, the Judas swing represents the low of the day, and our job is to buy as close as we can towards the low of the day, having our stop loss in a safe place below the Judas swing. Likewise, for a bearish day, the Judas swing will represent the high of that day, and our job is to sell as close as we can towards that Judas swing level. And that there sums up the ICT Judas Swing, right? The manipulation phase in the AMD. So if you like this video, give it a like, give it a thumbs up, and I look forward to seeing you all in the next one. Happy trading.